In order to squeeze AMC back to super macro supply, which was previously listed at $72 and now listed at $395, the chart must change. It seems like there's still some confusion regarding the 8 preferred equity unit dividend and the 1-for-10 reverse split conversion and what this did to AMC's squeeze potential in the long run. I will take you through the chart and show you why a squeeze of over 70,000% from our current price point to that all-time high super macro supply is impossible. Now, the 8 preferred equity unit was launched here in August 2022. 8 was issued 1-to-1 with AMC common shares that didn't add value, it split value. So it moved the price from $36 down to $18. After this, a 70% drop happened in AMC common stock. This is your typical super macro fractal drop. You can expect this at many other places in the chart with similar price action. The following year, in August 2023, was the reverse split and conversion, in which you received 1 share for every 10 that you had existing. This multiplied the price of AMC common by 10 and divided the outstanding share count by 10 as well. The conversion part was 8 being converted back into AMC at a 1-to-1 ratio. This dramatically increased the AMC share count. More shares outstanding equals more supply, and that matters for any squeeze thesis, especially when you have shorts piling on a stock that has dropped 90% up to this point in time from the June 2021 squeeze high. What is incredibly important to remember is that through all of this, the market cap stays exactly the same. The difference in price point is where the squeeze thesis basically dies, because you now have to reach 10 times higher on any squeeze to even make a dent in this chart up to the super macro supply levels. Now, even if you pull the visible rated volume profile and you see where the majority of volume is, it has been allocated in this $1 to $10 range. Now, VRVP doesn't show permanent liquidity locations, but it does show the price discovery and price action at locations above where you're currently trading. And this level is extremely thin. When BlackRock's repeating algorithm marks the stock price up, it marks it up to VRVP levels already been set in place. A perfect example of this was the TD and Schwab merger that caused the 400% run, in which they used Roaring Kitty's account to cover up the fact that massive amounts of counterparty credit risk and swap risk was migrated from TD onto Schwab. AMC is currently sitting at 515 million shares outstanding. If they are going to finish super macro distribution at 50 cents by June, as we expect, that 515 million share count outstanding has to be doubled to 1,030 million shares. If they're going to dilute less than 515 million, which they just put in an offer with Goldman Sachs to do 150 million, then there has to be some major market downturn in order to get AMC to finish its 70% super macro drop. And at that point, the math becomes impossible. We will not run 70,000% on AMC stock. A forward split of 5-to-1 is the only thing that is going to save AMC from bankruptcy. They should announce this at that $3,350 level after we mark up from our 50 cents level, roughly 400 to 500%.